All right, you guys, welcome to Forward Focus. It is September 4th, and we have got a lot of September birthdays here, a lot of Virgos. Yay, Virgo! So, we are going to be taking a look at what is going on in the overall market this week. And going to take a little bit of a look at what happened yesterday as well and the action leading up to it. Yesterday is one of those days where traders either have extremely good days or they can whack themselves. And so I want to talk about that just a little bit. We talked about it some in League of Traders yesterday because it is something where how many of you whack yourself on a day like yesterday? How many have had that happen? I'm raising my hand because I know that was something where I was always doing that. I would have gains for several weeks straight and bam, I would blow them all in a single day, if not more. And, the reason that we have found, oh, see, we've got a couple of people saying, yeah. So the reason I found this happens is that a lot of times we're losing track of where things are at on the bigger time frames. And this is why you guys, you'll constantly see me just like randomly post king and queen in the forum because our king and our queen are our larger time frame momentum and trend placement. And when we get to all-time highs and stuff like this, and we're kind of creeping up to new highs all the times, these panic drops become a lot more common, and we see them happen over and over and over again. And it was one of the things that I was like so proud of back in 2000 with the NASDAQ, because I had only been trading for a couple of years and I called that correction back in 2000. I don't know how many of you guys remember this, but the reason that I was so confident in it was because all of the internet stocks that had been pumped and dumped on smaller scales. We would see them happening on daily charts, on weekly charts. And so then when I saw like the same thing happening on the NASDAQ on weekly and monthly charts, I was like, hey, we better watch out because that exact same thing can happen. And sure enough, it did. And so it's not something where it was like, suddenly, oh, I'm never going to do that again. Yeah, right. I did it a lot, but luckily, it was something where, as Nicole mentioned, it's kind of a rite of passage for every trader. It's like, how stubborn can you be to keep crawling your way back out and then fall in the hole again? Crawl your way back out, fall in the hole again. Eventually, you watch out for those holes. I know there's a lot of uh, masochists out there, right? Humans like abuse. I think a lot of it has to do with when things are moving in one direction in the market. It's easy to buy the pullbacks and the corrections and to do well, even if your timing is wrong. And so when the market changes and flips direction, that wrong market timing might kind of give you a false sense of, hey, maybe I'm just too early. Maybe I just need to, try again, try again. But you're at levels where the impulse waves are now so extended that it's easier for them to flip. And I find that the problem is the hardest if you focus on tick charts all day, every day. So a lot of traders won't even use tick charts. They only use time frame charts. And the reason for that is that you see the momentum better on a time frame chart when things do change. The problem is if you're only using time frame charts, a lot of times you're missing the core patterns like phoenixes and flags and 2Bs and momentum reversals because the timing looks all wonky on a time frame chart and it looks pretty on a tick chart. So it's really getting into the habit of using both of them and making sure that you are constantly flipping and looking at the larger time frames multiple times throughout the day. So I want to go through over here and we're going to flip over. And before we go into too much, for like the other stuff, I want to take a look at what happened here in the larger market. And we saw the same thing again this morning. Same thing. This is a 1 minute time frame. All week we've been talking about 1, 2, 3 patterns in League of Traders. And the times that a 1, 2, 3 is most likely to happen is when the market is rounding off at extreme levels and we get things like shallow avalanches or avalanches happening up at those highs, and that can lead to it. So when we were looking at the larger time frames last week, we were looking at the NASDAQ as it came into a zone where it was getting pretty extended. So what did I say last week, you guys? Remember? When we were coming up with this channel, yeah, that it can widen up, that we could start to see more back and forth swings, that we could start to see more flush action happen. And I'm not sure how much of this I said in League of Traders versus in Forward Focus. I kind of put them in both usually. But what we were looking at was the smaller time frame had 3 waves up in there. And it didn't quite have it at the end of the week yet. So we were at the end of the week still at a point where we had a little bit more room, but we were definitely into higher risk territory up there. Because when we're looking at, some of the previous impulse waves, we're coming into pretty good extended move up there. And that's the zone where these 1, 2, 3 moves can start to happen. And when something goes parabolic, it's easier for it to flush because as things move to higher highs, then people are like, oh, hey, it's not done yet. And then, they'll still get on and kind of pile in. And we saw that with the breakout here. This had some really, kind of nice moves in here for the continuation. And we continue to see the smaller 1, 2, 3 type of moves on the intraday charts. And then up here, we got an avalanche. Let me go down to a smaller time frame so you guys can see it. Maybe not that small. I don't have anywhere in between, so we'll just use the 5 minute here. And it was a really pretty avalanche too. Look at this. So it had the 2 waves up, and then it had the momentum reversal, and then the avalanche. And look at that timing there. It was just a beautiful textbook shallow avalanche. So this led to our first kind of 1, 2, 3 moves of the week. And then this, even though this was like really extreme, we didn't have momentum shifting yet on the bigger time frame. So if we kind of squish this up here, see how that pulled back? That was the first main correction. So it's easier for things to kind of go back and forth a bit. We saw that happening over here too, to an extent, smaller scale, but it starts to go back and forth more. And so when that starts to happen, then you want to watch for other reversal patterns like rounded highs. Like this could have done a 2T up here too. If this had been like a little bit smoother like that, it could have gone to a 2T. It could have gone to a megaphone. Now, I will say that when something is parabolic, we aren't quite as likely to get megaphones happening. We're more likely to see double taps or a 2T to try to turn things around. So a little less common to get a megaphone up there once something starts to go parabolic and is at all-time highs. So with this move though, that was kind of our first indication of the flush trying to come into play. Now, if we go down to the smaller time frames, look at what started to happen over here. We had an extreme move back up off of that steep 2B down here, really steep 2B. extreme move back up. And when it tried to do 1, 2, 3, it only went to the halfway point. So that started to shift the momentum again. And what's interesting is that we've been talking about 1, 2, 3s all week. So that halfway point is a big resistance level to break through. So if you get a 1, 2, 3 move, you want it to have a very short little pause there, usually about the same amount of time as whatever pause might have been taking place during this first impulse move off of the low. So when it does the longer pause, then you want a shorter pause again to get the full measured move. So when that doesn't happen, and instead it holds at that halfway point, we start to see things like 2Ts become more prominent. And it's often a 2T with a double tap too. So this series, how this played out, this is actually something that if you take a snapshot of this, you're going to see it play out over and over and over again. So a 1, 2, 3 pattern that doesn't fully materialize with the 3 here, a lot of times that will then have these 3 highs like this, where it's basically a steep ballet foot. It can pull in here. It can go and do a 2T. It can go and do a double tap. But a lot of times that's going to try to lead to another correction move again. So that is a pattern that you guys want to watch for. And that's what we ended up seeing play out up here. And it went into then a shallow avalanche again. So what it did is it treats this pullback here, where it first came off that high, as the first correction. And then it treated this as the second correction. And you can see it tried to do a little bit of a break here and just couldn't confirm. So a lot of times when something, tries to go at one spot, it doesn't go, double it out. And that's usually going to be closer to where it's going to end up fully going. So with a shallow avalanche, a textbook one will look like this. Kind of have it going like this. And so we'll have 2 waves of pullback in here. We'll have 2 waves up, and then it will drop. And this can start a little bit slower and then gain steam with each short little correction as it continues down. So that's what it looks like when it's more textbook. But what we had happening yesterday was the same pattern, just a messier version of it. So as this is happening over here, I'm like, watch that queen and king. Because even though you get a 3-wave move down here, what's happening with this 3 waves? Each of those moves is faster than the previous one. So that means even if you see patterns like a 2B or something like in here trying to form, not a good shot of it doing a good reversal because this whole thing is gaining momentum. And we don't see this as easily a lot of times if you're on a tick chart. But if you pop up to a time frame chart, here's the 30-minute over here, right around the same time. Look at that, how that is so extreme. So even though it hadn't fully busted down and just completely crashed yet, we still had that increase in momentum there for the second drop. Look at the difference compared to earlier. See here when it had that really rapid flush, came back up. Look what it did there. It flushed a little bit, but then it kind of shifted momentum. And so this overall move ended up being slower here. And it didn't offer the confirmation, but when something happens once, that can kind of give like a false sense of security, especially if it happens twice. So what do I tell you guys? If something happens twice in a row, what do you expect the third time it happens in a row? Time price is one one thing. So you got a time correction, then you're more likely to get a price correction. But also, if you see a series of something happening like this, like rapid flush, slower move, and then it continues the trend. Rapid flush, slower correction, then it continues the trend. Rapid flush starts off slower. A lot of traders get the false idea, hey, I'm going to go and try to do it again. Happened the previous two times. And maybe you took the previous two times, or maybe you totally didn't take the previous two times. And now you're like, okay, this time I'm not going to miss it. I'm not going to miss it this time. And of course, that's the one that fails. And a lot of times it might even give you a false setup. So you might get a false break up and then it crashes. So that's one series that is going to help prevent you from falling into that fallacy of, hey, it's going to go this time, when really now you're at a much higher risk level. So even if it tries to go, there's more of a chance that it's going to fail. So in addition to watching those larger trends and watching those larger impulse waves, pay attention to that too. Okay, you guys? So that's going to help you out as well. And I know a lot of people got hurt yesterday. And all of those people that I've talked to that didn't get hurt yesterday, you know what? What's the one thing that they all said? Yeah, they've done it so many times before that it finally stuck. And that's, like Nicole said, it's like a rite of passage. I've got like several of you guys saying essentially the same thing here right now. So the main thing is to try to recognize ahead of time when it is higher probability for that to happen. And one rule of thumb is once you get to a level like this, if you have a few stops in a row, walk away. Just stop. Turn off the computer for the day, walk away, at least do it for a couple of hours, you know, just pause. And eventually you're going to get to the point where you'll have more confidence going with that reversal versus trying to fight it. So this is where the phrase catching a falling knife comes into play. Because those patterns that work so well for you during that entire trend on the way up, where you just saw it work one after another, after another, after another, if you are not watching that larger trend placement with the king and the queen, it can hurt. Now notice here, this is a 30-minute time frame. So as this came into support here, or even here, you know, we were saying like, I like to go for second levels of support, not first levels of support when momentum's picked up. This is the first level. So this is where a lot of traders will start to try to look for reversals. Look at how fast that is, you guys. Now here, we do get a little bit of a shift. So yeah, we had a little bit of a pop with kind of a low level Phoenix down here. But it took a shift to happen first on that bigger time frame before we saw that. So that's what can help you with kind of, you know, getting your risk levels a little bit lower. But a lot of times, if you see a move like this over here, and it had that extreme move on the downside, especially you guys, if that momentum is picking up with the moves, these can give you false moves up, and then they can still keep going with the trend on the downside. We call that a ballet toe because it's usually really pointed on when you go and go up to a larger time frame. So this will be your leg and this will be your foot. And she's a little ballerina with her toes pointed. So you might not see it if you're on a tick chart and you've got your charts opened up. but you'll see it more if you go to the time frame charts. All right, so what do you guys think is going to happen here now? So I said, don't use the first support, start to go for second levels of support. So on the intraday time frame, that second level support was, in here. We got a little bit of a bounce, and now we're on a larger time frame. So where would you guys expect this pullback to really have a better chance of doing a better bounce? We've definitely got, smaller time frame setups happening now. In fact, a number of you guys were trading those Phoenixes with me this morning. Yeah, so some of the other levels to watch for are going to be in here and then in here. And it just kind of depends on how we shift momentum. So we're coming into kind of that first level of support in here. So if this pops here and then goes like that, we might get a 2B. That is very similar to what we saw happening intraday on the 30-minute. Let's see. Can't see it. This 5-minute, you can kind of see a little bit better. So you could get like a 2B type of thing happening here. So see where it goes into first support and then it kind of pulls down a little bit more into the second, and that overall shifts the momentum. That can happen. So that's something that we could watch for at that level. This is such an extreme drop that we do get the horrible terminology of dead cat bounce at those levels. We need another term for that. I always say that. Has anybody else heard of another term for that? Where it comes into your support, it falls so hard, we get a reactionary bounce on that. That's awful. Awful, awful name. V bottom. Yeah, kind of. It's just really fast. I mean, a lot of times when I think of a V bottom, I think of like this, a meow bottom. Maybe we just need to call it like a dropped ball bottom, right? The ball bounces. Anyways, when this type of move happens, we do get sometimes market moves that will manage to come back up here. And we saw that happening on the smaller scale when this was up here. So it can happen again on the bigger scale. This is where we were talking about on the daily time frame that the range can start to widen up again. And that's what I suspect is going to happen, that we will start to see a bigger range widening up again. I am not going to rule out that this could go and bounce back up. And the reason I'm not ruling that back out is because we did see that happening on the on the smaller time frames, and this is the first time that we've seen this flush on the larger time frame here. So yeah, it's like a rubber ball bounce, like physics. Exactly. So I'm not going to rule that out. But when something has like a more sustainable bounce, what happens is that it will usually bounce, kind of shift momentum more like this, and then start to have a bounce. So that's actually an easier setup for traders. And you know what? That's the setup that we saw intraday. And we can't really see, so much here at this low, but that is what we saw happening over, let's see, where was it? Go back farther, here. So see how it had the really harsh fall and then kind of shifted, so the whole channel went like this. So that's what we saw happening over there. And then we had the low level tilted Phoenix down here that really kind of got this going. But we do have zones where that bounce can happen. It does happen more often when we're at an all-time high. Goodness, tickle in my throat. Hold on a second, guys. But other ways that we get these bounces happening that can drive bulls again is that if you get two smaller corrections in a row when it's at the lower half, that can lead to a strong momentum move as well. We aren't really seeing that here because this move is a little bit higher. But if this had pulled in and based right here, that could have helped pull that back up with stronger momentum again. We might still see a version of that. Maybe this goes into like a megaphone or something like that. But this is, another typical way that it can try to gain momentum off of a V bottom. So when it doesn't do kind of like a rounding off to try to recover, and it does just hold as a V, if you get those corrections like that in the lower portion, that's what can help drive greater strength. And that's what we saw again. Find it. Go up to larger time frame here. And so right here, that's what that pattern formed right in there. So it kind of had the combination where it did the slowing and then it did the combination of that low level tilted phoenix. So here popped steep 2B and then the shallow tilted phoenix down there. So this is common to try to drive bulls back up again. So when you guys see that happening, that's usually a pretty good buy when something has a really extreme sell-off. So that's what helped us have some interest in a phoenix down in here too. And we had like an initial 1, 2, 3 over here. And then the phoenix, and then the continuation. This was exactly 100% extension here on that phoenix. And then we're just getting another little correction in here again. All right, you guys, let's go look at some of the other securities here. So what would you guys like me to take a look at? Amazon? So right now, with the NASDAQ having, so much drive here from tech, if you watch a lot of the tech stocks as individual, just as the individual charts, that can give you an idea as well of what can happen on the larger time frame. So we were watching Amazon and we were looking at things like potentials for 2Ts and stuff like that. Well, here's 1, 2, and then there was our third push. And sure enough, look what happened up there. Each push was kind of a little bit less. 1, 2, 3, each one a little bit less than the previous one. So when that broke, that helped really drive that selling there. You can also see our 2T here. And this is the T3 zone. So since this fell into T2 really quickly, there's a pretty good chance that's going to pull in even further. Even though it's doing a bounce here intraday, there's still a good chance that that can pull back again. Five-minute, you've got that low level buy that was down there. See the Phoenix, just like we had in the NASDAQ. Nice 1, 2, 3 here. We've got kind of that tilted zone in the middle. This was one of the versions that we talked about. So the 1, 2, 3 paused at the halfway point. Only had one correction here. So it went and did the second correction here and then completed the sequence. So we're kind of going into a little shift here. There's room for that to bounce again, but it's had 2 moves up, so it doesn't necessarily have to. So this is going to be something I would just be day trading. I wouldn't be looking at anything else right now. Abbott. Let me get some things loading on some of the other charts here for us too. Look at the Russell, you guys. That was really nice measured move on that avalanche, on that 3,000 tick on the Russell. So this does still have room up here that this can kind of still keep pulling in there, but it was such a strong drop that usually the momentum's not going to be able to fully recover. A lot of times we'll see things kind of go slow and start to pick up again, but it's trying to do it with a little bit of a low level move. So here's one, here's two. So it's trying. So if this is going to gain momentum, we would expect that to gain momentum in here. It's kind of lagging the overall market right now. I'm going to pull up some of these other things on here. Yeah, the up channel is slow. I mean, it's at resistance here. This is where if it's going to do a 1, 2, 3, it's going to form it right here. The problem you've got is how much is it fighting the overall market that is already going, like the S&P 500 and the NASDAQ, they're already going. So PLUG, very similar to that overall market. It's come into first support here. These are tricky, you guys. It's really like you've got to watch the momentum shift on the smaller time frames right now. So you can see 1, 2, 3 ended the trend down here. We had a pivot V bottom. So my guess is it's going to try to break that trend channel, but it could then start to go and do more swinging back and forth. These are always trickier. At least I find, like I always try to focus on the smaller time frames on this because the trend can keep going when this happens. Because what we're looking at right now is this is our overall momentum here. So this is a really strong move up. It's already had the 3 legs down. So we need to watch how far this move up happens. If this can pull through that channel up to about here, it has a good chance of continuing the trend. But you would want it to pull up to about there without pausing. So if it pauses before that and like, you know, hugs along here, it's harder for that to keep going. It's more likely that it's going to go and do something like that. So where that momentum keeps going is going to be very, very crucial. So that's the difficult thing too with where we're at right now with the overall market is it does depend upon how the smaller momentum shifts happen now. And I'm a little delayed on this chart, you guys. So you'll have to look at, you know, what the live charts are. I don't have live stock data on this Ninja Trader here on this computer. Why up there? Because it flushes everybody out that was short and it gives people more confirmation. So once it manages to break through that channel, then corrections have a better chance of being buying opportunities. Whereas if it stalls before it gets to that channel or at that channel, then it can have a harder time, even if it hugs the channel, because each of these moves is so extreme. So if the move was slower and you had kind of steadier moves and it came up and hugged the channel, then hey, you've got a great Phoenix buy. It doesn't have to have broken the channel on the bounce. But if it has a really strong move down, that needs a more powerful bounce to really kind of flip the psyche of traders. So it has to do with how each of these came down. So if these were slower on the downside and then it bounced and stalled at that upper channel and went into a range, that's fine. But if it's flushing down really fast, you want it to have as big of a flush that goes past that channel. So that's a really good tip there, you guys. And that was a great question, Lincoln. And it is the same in futures as in stocks, exactly. So ABT, we're right at gap closure. You're right at a measured move too. There's still going to be some wiggle room in here. Let's look at this. So you're shifting. Here's those three lows. Remember how I said sometimes these can trap people because this is your ballet foot. You got your three low with a momentum reversal. It only hits the momentum reversal main target. It doesn't go further. And then it has an extra flush to the downside. But it was too fast to do just a momentum reversal plus because look where it tests that channel. In a true momentum reversal plus, the distance here to where it breaks is going to be wider. So it would come up here, come down, and then go. So this isn't a good momentum reversal plus zone. We've got a little bit of this trying to attempt a mini head and shoulders down here. So you really want to see how that momentum tries to play out. But it's not a good momentum reversal plus, even though this is still main support. And you do have trend exhaustion here on the 5-minute time frame. On the bigger time frames, whenever I see momentum like this into a gap closure zone, this is what we call widening up zone. And there's so many ways that the market can react to zones off of this. Sometimes we see a good bounce. Sometimes it comes up and it will do like that shallow move and then try to gain momentum. And sometimes we get a really extreme bounce. It does happen. But it's also really common for this to shift and to keep pulling into this zone better so that you start to get more back and forth moves down here. And that's more common than a really strong bounce. So usually if I'm trying to look for a bounce where I want like a continuation move of something, I want to see something where it comes down in here, or maybe it pops, but then it shifts and then gives me a buy. That's going to be a much better setup than anything that's happening right here. So yeah, you can get things happening here that can hold, but the odds just aren't as good as if we do see a momentum shift on an intraday time frame like that. So we really had that exhaustion gap up there on the daily time frame, and the weekly time frame, it's a measured move up into that level. So we are at points where bigger swings can keep happening up here on the weekly chart. Notice how we had kind of the slower swings here with the 1, 2, 3, but it doesn't quite go into like a perfect momentum reversal over here because we don't have the deep V's. So it's essentially a momentum reversal plus type of zone. So this can easily start swinging more on the weekly charts, which is really interesting, you know, I wouldn't be surprised if a lot of drug companies are doing that or going to do that, especially things that are in like the COVID race. TDC is a good example of where something can kind of look like it's doing a check mark and then it does the fill. And this, what we were talking about with this was, again, because of what was happening on that larger time frame here. So see this as this pulled in right here into the congestion with the really strong momentum. It tried to do the shift here. So that's where it could have tried to bounce. And it just couldn't because even though it shifted, it was still really strong. So sometimes you will see them hold there and go, even though it's still a strong move. We saw that happening in the NASDAQ a couple days ago. So it does do zones like that where it can do that. And then it will hold and come back up. But this is a good example of the risk involved. So the more that momentum shift happens, where you can see like a more distinct shift, the greater your probability that it's going to go. So even though you're going to get exceptions where it will hold here and it will come back up, if it shifts more at the support, it's easier. So keep that in mind when you're looking for things that are finally looking to start to try to reverse. So again, this is something where this could still, even put in a new lower low here on the weekly. Right, what am I missing with that ZYNG Quran? Chart is not loading. That is not something I trade, so sorry about that, you guys. Well, ZNGA, well, that will help. That's very simple. Like, what is going on here? All right, we'll see if that one works there. Company is Zynga. Yeah, I just don't know that one. So let's see, TCOM. I've heard the name, but I can't place it. It's a mobile gaming company. Okay. So TCOM here again, see that switch, that change? This is so close to what we saw intraday on that NASDAQ, isn't it? It's trying to do the low level moves. So it needs to gain steam really quickly out of these low level moves. Otherwise, it's just going to be going too long. So usually what it needs is 2 and then surge. So if you don't see this surging here really soon, that's going to be a problem. So watch that channel. It should not break that channel. If that breaks that channel, that could go all the way to a new low. That's what I would watch on this. I would want to see this really confirming. And right now, it's not quite doing that. And this is another one, breaks that upper channel. That's going to be the best. So if it stalls at that upper channel, eek, watch it. So here you can kind of see those low level bases, you guys. This is your first one, and then this is the second one. So this should be going. In fact, it probably should have been going a little bit sooner. So that's a bit concerning for the bullish side of things. When it should do something and it doesn't do it when it should do it. Let's see if I can find, I might have an example. Let me look, hold on. See if I have an example in my saved charts. Might be on my other computer, but we'll try here. No, those are all showing ones that confirm. Well, I can show you what they look like when they confirm. Let me make these bigger and then you can just see all of them. So what you're seeing here is that you'll get the 2 corrections, but then it will start to come up and basically offer almost immediate continuation. And that's what you need to see. So if it's not offering immediate continuation, then that is easier for it to turn around and break. So that channel is really, really important. I know these are still kind of small for you guys, but at least you can see, where these little pops can happen. And so that channel crucial. You want that channel to hold. So when it doesn't hold, so this one didn't surge, but it doesn't hold, it's either going to go into a longer range or a bigger pullback is possible. So in this case, it's this. And so here's where it should take off. This will be one to watch over the next couple of weeks, see what happens, and add it to a folder if you're keeping track of examples that are doing that. Let's see. So here's a ZNGA. So it's definitely extended. This is a widening up zone. Here's our 1, 2, 3 in the middle right here. Smaller 1, 2, 3 here. Another up here, 2T. Bigger measured move. So, you know, this, I would just be smaller time scale trading this. It wouldn't be something I would look for on a bigger time frame right now. It can keep falling. I mean, this could easily go into a shallow avalanche. It could go into a megaphone. There's so many things that this can do right here. And that's the problem when we get something that goes really extreme. We call this a widening up zone because it can start to do a lot more swings back and forth. There's a lot of things that it can do at that point. So yeah, here's T2 here for like a bigger resist or bigger support level. The 2T T2 here was right here. It hit very, very fast. This was T3. It hit that pretty fast too. And so now it's kind of trying to do that extra shift where sometimes, hey, that holds and we get an extra pop. Other times it can't get going and it goes and it does a an avalanche. Other times it will come up here. It'll look like it's doing a fake break for a Phoenix, maybe put in a slightly higher high and do a mega lanch. There's just so many possibilities here, and it's just going to depend upon the smaller time frame momentum changes. In this case, the smaller time frame is a daily chart, because if you go down any smaller, there's too much back and forth wiggle room. So you just need to watch how this momentum plays out here now. So if this kind of goes like this and can't really get going, once that starts to do like a measured move there, that's another shot for a short. If it doesn't go there, double it out, try again. So it's going to be a harder one, you guys. A lot of times after the 2T, we get avalanches and then we get 1, 2, 3 patterns. So this didn't do like a really clean avalanche because the momentum was so strong on the downside. And when it's really extreme to start with, the continuations can be a little bit more wonky. So a steady pattern would be to go into the 2T, to go into an avalanche, and to go into 1, 2, 3, and then you go back at a widening up zone again down there. So that's kind of a steadier way of looking at it. And oftentimes this will look like a head and shoulders too, like that there. So this will have like 2 nice moves down, not one single bar drop. The single bar drop, that makes it harder to have as like predictable of continuations, and you got to watch the smaller movements. So a lot of times when they try to continue, they do this type of thing. So even if this did like a 2 wave here and tried to break down, there's a greater risk that could just be a trap and pop back up, because this is too extreme. Especially if this bounces more than a third, then that makes that, if it did like that to try to do an avalanche, it makes it higher risk that it's not going to follow through as well. It'd be better if it went as like a 1, 2, 3, but this is past 1, 2, 3 development time. Oh my gosh, our session went fast, didn't it, you guys? Let's look at the QQQ. So the QQQ is going to look a little bit different than our NASDAQ just because it's of intraday versus all sessions data. And I was talking about this in League of Traders the other day, yesterday, I think it was yesterday, right? With the gap anyways. That was one clue that we would get a really good trend today because what's that pattern right there? What type of gap is that? Bull trap breakaway. Yes. We're actually going to go with doing a week of gaps again here in League of Traders too. So you'll start to learn these as well. And so here is another breakaway gap here. So it breaks out of the channel, but it's not a bull trap. This one's a bull trap because it closed at the absolute high and then opened to break that channel. A runaway gap would be the gap that happened this morning. Yeah, the bull gap is also an exhaustion gap. So this is an exhaustion gap right here. And you know it's an exhaustion gap because the size of the impulse wave here. So like here's another example of an exhaustion gap, except that in that case it was on the downside. So when you get like those impulse waves, here's another one where the impulse waves are about the size as a lot of previous impulse waves, and then it gaps on that last portion of the impulse wave. That's usually going to be an exhaustion gap. Again, we see them a lot more in stocks than we do in futures. So here's another breakaway gap, bull trap, but it wasn't as much of a bull trap because this was still showing so much choppiness here. It didn't quite trap as many people, I don't think. This is a breakaway gap in here. Both of these are. You could call this a runaway gap. It's a breakaway and then it's breaking this channel. It's a runaway gap and that it's also continuing from the previous one. So we'll be talking about these here, maybe even next week. Next week's a shortened trading week though, and I'm off. I'm on vacation the week of the 13th, you guys. It is my birthday that week, as in all of you guys too are celebrating your birthdays, a lot of you. So I'm taking that week off. We're not going to have forward focus that Friday. I'll send an email to let you guys know that as well. So we might start with the gaps next week, just kind of run through the basics and then pick it up the week after I'm back from vacation too. How's that sound? Good, good. It would be really funny if one of you said, "What? No, I hate that plan." No, nobody wants to dissent. All right, you guys. So no, we're not going to have League of Traders on Monday. So we won't be doing League of Traders on Monday. So it's going to be a shortened week. So what we're going to do throughout the week is that basically each day in League of Traders, I'm going to cover a different type of gap. And then after vacation, what we can do is get into looking at the intraday action on those gaps. So stepping it up a level on how to trade them intraday. So first of all, we'll start with, hey, what type of gaps are tradable? What kind of gaps are they? Are they the ones that are going to continue with a trend? So can you swing trade them? Are they ones that are going to end the trend? And what are clues that we can look for to fully discern that? And then we'll look at the intraday action. So even if you're a futures trader, it's going to be really important. We aren't going to see as many examples of each type of gap as you might be if you're a swing trader and or a stock trader where you're looking through a lot of different stocks every day, but you're going to definitely come across them. And a lot of times they tend to be when a major shift happens. So being able to recognize that on the daily time frame is really important to help avoid getting hurt on days like yesterday too. So this Q here, if you look at this intraday, that breakaway gap is much more prominent. Now look at this here on the 30-minute. Look at that bull trap. It is so clear when you're looking on just the Qs or just the intraday charts of the futures, not the all sessions charts. So when we drop down even further, we have core gap strategies developing. So look at this, how it has the 2 waves down, the 2-wave shift, and then the breakdown. This is a core initial continuation pattern for a gap. But so much easier to see it when you're looking at it on an intraday chart only of the Qs. So if you do have stock data or ETF data, I would suggest checking that out a couple of times throughout the day, especially when you're going into the open, because that can help you out a lot. All right, you guys, I know I ran over here on time, so I'm gonna go ahead and wrap up now. And I will see you guys back here on Tuesday for those of you in League of Traders. We will pick up on Tuesday, so it won't be quite a Mentor Monday session. Basically, just be covering gaps throughout the week and doing some scanning and looking at them. So lots of stuff in it for you guys that are stock traders, and I'll show you guys how to look for playable gaps in the morning too. So like before the market even opens, how do we scan for the best stocks that are going to have the strongest trends that day? So we will take a look at that as well. All right, you guys, I will see you back here next week.